Hey traders, Raghee here. And the obvious question right now as we take a look at the way in which these markets continue to move higher, really just pretty relentlessly, is a common question that I get within the context of an uptrend. Now remember, uptrends are inherently imbalanced. They're imbalanced because you've got more demand than you have supply. It's just basic supply and demand principles. Now, when that demand wanes, clearly that's when the market's going to stall and or head lower. Heading lower within the context of the overall uptrend that we're in is going to be an opportunity. Now, the last time the market did this is the last time we actually had a very nice, but admittedly dramatic move to the downside opportunity. And the thing is, people remember this. They remember that level. They remember the fact that the last time this happened, they didn't buy, and they're starting to chase higher, right? You can see that with the way in which a lot of these markets are really moving higher very quickly. It's momentum begets momentum, right? Which is what a lot of momentum traders love about breakouts. Momentum begets momentum. The problem with that is, unless you're early in on the momentum, you have the risk of being, as it's called, the greater fool, as in greater fool theory. All right, so that kind of sets the stage there. So what's the plan in a situation like this? Okay, Rag, I've been watching you enough in these videos to know you're going to tell us we need a pullback. And if that's what you're thinking, you got it right. That's exactly what I'm thinking. In the meanwhile, what I'm going to do is shorten the time frame. So in the meanwhile, I'll be thinking about day trading exclusively to the long side, waiting for those opportunities to see the market test V-score lows, volatility lows, VWAP lows, just something that I can build a long trade off of and control risk from. And what does that mean? That means that if I get an opportunity to get a bounce off of volume weighted average price, I can use some percentage of wiggle below that volume weighted average price, some percentage of my account by way of wiggle, or I can use the clearing range low as the validity for the buy, whatever is affordable from the standpoint of risk, right? And, one of the things I was mentioning to my group here was, hey, gang, if you take care of the risk, if you quantify the risk, and it's not just quantify, you quantify and calibrate to the risk. In other words, you identify what it is and you accept it. The trend, if you are trading with it, will take care of the rest. That's the philosophy I have in markets like this. So you're asking, well, Rog, do I have to go to a 1 minute time frame? No, I mean, you can shorten the time frame to a 15. You can shorten the time frame to a 30. It's really what you're comfortable with. You don't have to go to a 1 minute. So, and this looks crazy, I know, because these are all my 1 minute tools on a 30-minute time frame, but I'm usually not a big fan of a time frame that doesn't have a double green. So that means if I'm going to start scanning intraday time frames, I've got to find a time frame that has double green so I can start to follow that trend. And the 60-minute looks pretty decent in that regard, but golly, these look horrendous. This is not how I look at it at an intraday 15, 30, or 60-minute chart, but that's how it looks when I put the 1 minute day trading tools on there. But my point is, look where the intraday will have a double green, and then you can focus on that, okay? Now let me show you over here on the left. These are the kind of trades that we took, and I left the notes up here for a reason here in the free video, because this is what I alert members to. We're not super aggressive. We're not super active either. We wait for our pitch. There were two scenarios from which I was open to a NASDAQ buy. There were two scenarios that I was open to a handful of setups. You see the Dow down in here, the NASDAQ, which was a relative outperformer early on, so you could see how we were building zones, building setups. And each one of these is an independent idea. Think about independent setups for each one of your trades. And if you want, pause the video and take a look at the kind of levels we were looking at. And it should give you some insight into what it is that I share with the folks in the futures room. All right, gang. Hope that helps. I'll see you in the next update.